Here I'm going to show you the basic setup I go through just to get the chart set up to trade from. First thing I'll do is start with the daily chart, but in this case, to set up my 3 fibs, I've had to go out to the weekly chart here, mainly because this last correction move has come down further than I had thought it would. So I need to go back and measure all this space here, or time, since cable's been in this uptrend since back in November of 2005. As far as the downtrend, it's pretty much easy. That's the correction we've made here. There's also something about these U.S. brokers, about them not being open all of the hours that the market is open. You know, sometimes it gets false highs here, and that can screw up your levels a little bit. Most of the time it's harmless, but in this case it's far enough to make a difference. So what I've done is adjust this high to the actual high that we had back in November. From here I just switch it to a daily chart. Now if I can go back and find that retracement fib. Get it to where we can get it here. Alright, something you probably want to see here is how I use it. The retracement fib is actually what I use to measure the moves that are counter to the current trend that price is in. Back at this point, this is where I would have had them, and once price breaks from your short of your retracement fib, it pretty much gives you where price is most likely going to go. And once its targets were met, I no longer needed it. I just continued to pull my downtrend fib to this level or this low that it made, and I can see it come up and tested the levels once again. And you could have used your retracement fib again once here. But what happened was it actually blew through the retracement's targets all the way down to the downtrend's targets. So, and as price keeps making new lows, we just keep pulling the fib to the new lows to where we are today. And now the price has made this rally over the past few days here. For this move to continue up, we find out what our bounce points are here. Now when I use my retracement fib in these moves that are counter to the current trend that price is in here, I don't always draw it from the daily. I'll usually do it from the 1 hour. And how I do that is when we get to a point where we have a break in the current momentum that the price was in last here. Let's go back one more day to make this easier. What I would be looking for once this new week started was we've broken this previous day's intraday level, and price has gone short, and it continues short all the way to the targets we use. And if you would have kept following along with your intraday here, you'd see the price makes a reversal here because it's showing a long signal, and it actually holds price. But what you want to see is, do the levels hold as it goes into the next day? And we can see that they do hold. So from this point on, as we make new highs, I would begin pulling my retracement fib. Now what we want to see from this is we want to count our retracement fib levels as stronger levels than our intraday, because these intraday levels are just based off of each day individually, basically, where our retracement fib is going to be pulled across several days. And I don't know if you've seen it or not, but in the thread today I posted that if 98.50 gives away today, there's a good chance we could retrace back to the retracement levels, and this is why. If we get this break either here today or tonight during London, that's going to open the door back up to this area right here. and it's already came very close to testing that now, just from the news this morning. If these levels hold, we'll just continue to pull the retracement fib up as we go and follow along in our intraday trading.